Okay, hey everybody, this is Brett from Moonstream Crypto. I want to give you guys a quick update on the markets, and as always, thanks to Max for letting me hop on and share with you guys. So looking at this chart of Bitcoin, by the way, we're going to be looking at a number of things, including a market-topping signal study that I've been following, and we're going to talk about a little bit today. It's an interesting one we can keep an eye out for. Of course, we have our own market-topping signals that we'll be watching, and that allowed us to get out and call the top in November 2021. So if you want to stick around to the end, I'll be sure and cover that along with some other cool studies. So back to Bitcoin here, not surprising that we pulled back here and we're holding here at the 21-day exponential moving average. I do think we see a bit of a drop here as we are seeing. Hopefully we hold that level, which is somewhat of a support resistance level if we just draw this, and typically we see those things flip over, one becomes the other. And let's see, if I hold the shift down button, by the way, here's a little trick in trading. If you hold that shift button, it gives you a perfectly horizontal line. So here resistance flipped as didn't really support too well. Resistance. Now we're above, retesting that as support and the 21-day exponential moving average. So I'm just glad that we didn't see the head and shoulders play out to the downside, which was a concern I was posting to our members last week saying, guys, I have to tell you, a little bit concerned here. Left shoulder, the head, and the right shoulder. Also, we saw that at the last market cycle high, and one of the reasons I was calling the top in November of 2021. So as with many of these charts, we get conflicting signals for a period of time, and we look for one to invalidate. So the fact that we've pushed up now and this right shoulder here has been invalidated by this big green candle tells me that we're more than likely heading higher, coming back to retest this as support, and also that 21-day. So we had 1, 2, 3, 4, 5 green days. So a couple days of pullback is normal and actually good. So I am expecting this to push higher. We will look at the global M2 money supply, also showing that's likely what's happening next. But let's talk about this just because it's important that you're aware. These head and shoulder patterns are high probability, and when you see these, the measured move from the top of the head to the neckline, maybe I drew that a little too tall actually. If you do it a little bit tighter like that, just like how we do anything is how we do everything. So I'll pull that down. These things are not always exact, but it's good to work with these. The neckline breakdown would have put us down around that 90K level if we had gone below it. But you know, I like the simple signals and don't get into fancy things like Elliott waves and Fibonacci circles and Gantt fans and all of that. You don't need that stuff. So essentially, this being largely invalidated, we have buy blocks here. We can see our buyers lined up in these zones. This is our proprietary buy block signal where we visualize concentrations of limit buy orders. The other reason I don't think we'll go back below that is oftentimes we will retest the midpoint of these large candles here, whether you call them vector candles or the fair value gaps that the market makers do. But we can see in this light green box the money flow coming in. That's also part of our ERI that we look at. And but essentially these midpoint of large candle moves typically retrace. Okay, we did sort of see that right here, and sometimes they're not exact, but this to me is close enough, and we have buyers lined up. Again, limit buy orders in this zone and this zone. So a lot of buyers in here along with that 50-day exponential moving average. So worst case scenario, I'd say if we dropped, might come down to 102K, 104, right in that area, maybe, but I don't think so. I think we bounce from here. And the other thing too I'm looking at is this midpoint of this candle too, also a fair value gap coming back at testing that exactly on this candle here, as we can see. So that tells me it's good. We retested that, probably going to push higher from here. Not guaranteed, but we play the probabilities as we know. And so let me just open up this chart, look at our other signals here and tell you what I'm seeing. A little bit overbought here though. And so we're seeing a red ERI candle. Hard to say. I think overall the money is on the sidelines waiting to get back in these markets. So let's take a look at the total market cap, and then we'll look at some of the individual coins and some of the other studies that paint a pretty good picture of what we should be ready for and get ready for here. But total market cap, as we can see, is pushed up to was pushing up toward 3.5 trillion, and that old high over here again. Total market cap really drives the market. It is the real number to watch out for. If you're new here or maybe haven't seen this, if I go to a weekly chart, the last cycle, the top was exactly $3 trillion. It had nothing to do with the price of Bitcoin. Look at that. We went right up to $3 trillion, almost exactly to the dollar programmatic selling kicked in, everything dumped and went down. And of course, our signals called it exactly that: red arrow, bearish engulfing candle, and these three aligning there. When we see alignment of these four, we know that's the top. So basically, we're watching for that also. And I'm going to be covering another bear market top study that I have been doing for a while, and some other people are starting to talk about. So stick around till the end. We'll talk about that, and it'll give us another early clue where this thing could be topping out. And so I'll also show you my path to 150 to 200K Bitcoin. We have covered it before, but good to revisit, make sure we're still on the path, and I think we are. So on this chart here, total market cap, we do see a lot of sellers up in this range in that red box. So more than likely, we're seeing this little pullback here. If I were going to redraw this, which sometimes we do, new information equals new decision. So if we go here, this pullback, and then probably hit that midpoint like that, breakout, retest, and then kind of make sure that that's connected. So more than likely, something like this is in the cards. And I would rather come down and retest a support moving average, even a support trend line, and have a bounce off of that, because it'll give us a little bit more momentum to keep on going higher. Okay, seeing a little bit of bearish divergence on our RSI Pro, not the end of the world. If we see multiple ones, I do have that, and the ERI on the daily. So we'll see. We certainly could pull back a little deeper down to 3.2 trillion, even just above the 200-week SMA. Of course, we want to see 3 trillion hold the high of the last market cycle, but I really don't think we're going to keep coming down. The caveat being is if this war fears escalate with Iran and Israel, people saying that we're pulling our people out of the Middle East. I don't want to really get into this, but there is that specter. Markets like to overreact. And just to take a quick peek at our weekly chart doesn't look too bad here. And so I think that even if we had a near-term scare, I think things are kind of quiet too going into the FOMC meeting next week, but largely priced in that we won't get a rate cut just yet. So anyway, all we can do is look at what we have in front of us. This is best case scenario and the base case scenario. So let's keep going and have a look. By the way, if we look at total 2, we see a lot more sell pressure. This is the whole market, excluding Bitcoin, but including Ethereum. So this tells me Ethereum it's bringing a lot of the weakness to these markets. And of course, we have a symmetrical wedge forming right in here. And these things will, they'll break one way or the other. We don't know which way, but this tells me ETH is still sort of the black sheep of the family, and a lot of sell pressure in here on the overall market, and then up here. So the reason I know that is if we go to total 3, which is everything but Bitcoin and ETH, it's not as bad. We have some overhead supply here and then up above, but not quite as with the ETH chart. So anyway, hard to say. Some people are saying ETH under accumulation, and we're hearing that, but not really seeing it in the charts. This blue overlay I pulled from an earlier part of the chart, and these things aren't exact, but I try to overlay these fractals just for a possible path. And we could, so if this happens, if we see this roar out of here, that would indicate a altcoin rally in play, and then kind of push up to these higher levels, and then who knows, then it could just go straight down to zero. Not down to zero, but I'm going to show you where I think the markets are going. And, when we could see an altcoin rally. It's hard to say. I'll leave that on here. It'd certainly be fun to have some altcoins run. But overall, I would say, the reality is a lot of the money that was available for the altcoins roared into meme coins with the whole Solana and pump.fun phenomenon, and the wind was let out of all of that, the gas let out of that. So there's not a lot of that retail money left to buy in the altcoins. So if you're holding your old shitcoins and small caps from the prior cycle, hoping they come back, I'd be careful with that. I don't know that they will, and the opportunity cost of holding those means you may miss out on bigger gains on some of the quality altcoins, which we'll cover today. I like coins that have things like a monetization model, potential for customers. Anyone in business knows customers, call me crazy, are good for business. And a lot of the altcoins, a lot of the speculative crypto coins are just that. They're pure vaporware. They don't have really any customers. They're not venture backed. They don't have money. And those are the ones, even though the narrative might be great, just keep in mind in a bear market, when they lose 70, 80, 90% of their value, The developers still need to pay their rent. A lot of those kind of go where there are more stable platforms and customers. And so, the internet bubble, kind of a good analogy. Probably many of these are not going to survive. And so I may want to consider at least selling some. If you're holding large amounts of these altcoins, you may want to reallocate to some other ones that may have more potential. There are a few. Maybe I'll touch on a few today. But anyway, moving right along, that is the total market cap. I won't look at DeFi because it's not looking, I'll just pull it up, not looking terribly good. A lot of sell block. Look at all this sell pressure in this DeFi zone. Ondo Finance is maybe the only one that looks good, although that's really more of a real world asset project. And so it's kind of defying this. But DeFi looks like it's going to have some trouble here. And I don't know, probably rolls back down, maybe does a double bottom. Does down in here and then goes higher. So we'll skip over that. Bitcoin dominance, again, you can see from our sell block signal here that 70% of the path to 70% being met with a lot of sell pressure in this range. And I'm not exactly sure how we calculate that. Because it's Bitcoin dominance, but this is done by our in-house programmer, quant engineer, mad scientist, programmer, trader. Anyway, but this showing that Bitcoin dominance on the rise again. I would expect to see quite a bit of trouble here, and we don't know. Of course, back in here, we had like an altcoin weekend when dominance dropped. We saw a pump in altcoins, and then that was short-lived. So certainly we'll keep an eye on that. But not seeing, the thing is, we're not really seeing where the money is going. Solana dominance is heading down. ETH dominance is rolling over here. The only thing going up a little bit is USDT Tether dominance, and I have a study on that we'll want to watch and keep an eye on, although I think we're in just fine territory. Bitcoin, the CME gaps, people have been talking about that. There is a recent one right in here that hasn't filled. So another reason why we could pull back down in this 105K region and then continue higher or even down into these sell blocks. Who knows? I was a little concerned we might push down to this CME gap, which we can also see on the IBIT. Which is a study if you're new here. By the way, if you like these kind of studies, make sure to hit that like and subscribe button, leave a comment and feedback. I'd love to hear it. This is things. Some of this people no one else is talking about. I'll pull up the IBIT gap here in a minute, which is pretty sure I noticed it first. Can't say invented it, but similar to the CME gaps, we're seeing these on the IBIT, which is of course the BlackRock ETF, and these typically do backfill. And I'll show you examples of that as well. So, look, we're not out of the woods yet. Lots of sell pressure on all these things. We just need a really bullish push. And that could come from the M2 money supply to take out these sell orders, maybe even trigger a bit of a short squeeze. That would be ideal, and maybe what's being set up for. ETH dominance, not really worth watching, and so let's not get into that. Okay, moving right along, as they say. I'll come back to that USDT. Actually, let's do that, and finally figured out how to move the charts around without leaving and losing full screen. How about that? This is my 150K, 200K scenario. Let's come back to this. This is Global M2. I've overlaid this with the 10-week delay, which matches up pretty closely. And so not exact, but this would signal that, down here we had that dip in M2. We've rallied out of it following this dip as well. If you're not familiar with how Global M2 leads the markets, it's usually 10 to 12 weeks ahead. So this is offset by 70 days. Meaning that if we pull it back, this is the path that Bitcoin likely will follow, should follow. So that would indicate a push up here around 114K all-time highs, and they may be another pullback, right? So I'd be prepared to take some profits at 114 and wait for a pullback, because then the big run really should kick off, and that would be around mid-June, June 18th. Right around the time of the FOMC meeting, and when the uncertainty is removed, and of course we can always go to the FedWatch tool, pretty well priced in, no Fed drop. There's Powell is in an arm wrestle with President Trump, and Powell not wanting to be bullied and kind of suggesting that even though inflation appears in control, that the uncertainty surrounding the tariffs off one day on the next gives him the apparent resolution to not drop interest rates. It's being priced in about 60% in September's meeting. And that could certainly kick off the second leg of the bull run, which I think we'll have. I think Bitcoin runs to 140, 150K, and then we have a 20-30% pullback midsummer, and then we have a rip-roaring rally to 200K, and then that's it. That's my thesis. Doesn't mean we have to hit those numbers, but I'll come back and show you that study, which we've seen before. Here's that IBIT chart. If you haven't seen this, I've been following this since day one of the IBIT, all the way back here around January of 2024. Had a nice little cup and handle breakout, and all these little green circles, or orange circles rather, are gaps, and what that signifies is markets are closed, so either over the weekend or after hours, because these are Wall Street products traded on the CME. So similar to the CME gaps, if over the weekend here, this was a Friday, right, markets closed, opened up down big, this gap became a magnet for price. We filled that gap. And all of these gaps have filled, all these orange gaps, all the way till I got to this one, which didn't fill yet. Maybe in the bear it can. They don't always have to fill. Generally they do. And so we're watching that with some unfilled gaps down a little bit lower, but I think we're fine for now. And then they started working 100% again all the way until they stopped. You know, they go in phases where they're very accurate, and then they sort of, move around a bit. So we have an unfilled gap here. We have one here. That would be similar to a 90K Bitcoin, and we have a couple of smaller gaps right in this region here that have not been filled. So no big deal. Not a bad thing, not a good thing, just a thing to keep an eye on. I was proposing, here's my squiggle. We almost went down here, and we're kind of pushing up, so we'll see what happens on that. The Tether study, which, again, we're going kind of fast because I've covered this before. The USDT dominance, which is Tether, operates inversely to the markets. As money flows into Tether, which is basically money out of the markets, typically not into dollars, not back into the fiat banking system, but they go into Tether. This, of course, was pushing into the depths of the bear market through here. In this study, we can see as the dominance comes down and touches this trend line all the way back since 2018, these are the market cycle highs. Money flowing out of stablecoins into crypto. So this was sort of April, May, June, July in the summer, and then we pushed up money back into Tether out of the markets. That was that July mini bear market, and then we came back down to retest this line, and that was near the end of the bull market, right in here, November 2021, when I was suggesting getting out of the markets and pounding the table to get out over into this range. And sure enough, then we saw all the money, not all of it, but most of the money out of the Bitcoin crypto markets and into stable coins. So this fractal is this exactly overlaid. So I'll put this back there. And why isn't it going back here? There we go. So I'm watching that as a possible fractal, and I've labeled these. So crypto correction zone, crypto crash zone, and the bear market of the next term. So that would be, I'm thinking Feb 2026. This certainly could extend out. Okay, so we have to be somewhat flexible. But as like within the shopping mall or the amusement park, you need that sign that says you are here and here's the exit. The exit doesn't help unless you know where you are now. So where are we now? We had this bounce. We had a money flowing out of the sort of seeing some highs late last year, and then we saw the market bleed out, money going back into stables. Remember January till about June, May-ish, where we saw a big drawdown, mini sort of not bear, but a bull market correction. And we saw that with Tether dominance going up. I know it's a little confusing. Point is, we're coming down now in this bull phase. I do think this continues down to around July, and maybe we get till August of the bull run. Maybe that's where we hit that 150K region, and then we want to be really careful, because then likely we'll see money flowing back into stable coins and a crypto correction and possibly a crypto crash. But I don't think it's the end. I think maybe we see another dip down in this area and a second bull market pushing up to 200K. I don't know. I've been saying that. My study has been showing that since for 2 years now. I think having a double top this year, kind of like in 2013, although 2013 was early market peak, and then most of the year was bear, and then we hit a secondary peak. So look, no two cycles are alike. This one surely is different, but it's good to have a roadmap to see where things could be going. Okay, well, let's see. We'll go back to the coins. Here's another study based on the bull market tops, and I've been doing this one for a while. Ben Cowan just came out and did a similar study on this. It's nothing new. I didn't invent it, but basically the 200-week SMA is this blue line when prices get above the old all-time high, and when the old all-time high the SMA crosses that. Don't look at price so much as the 200 weekly simple moving average. Then if we could look up, that's usually when the top is. Interesting study, right? So over here we see the 200-day SMA crossing above the old top around 1300, and then going up. That time-wise was the top back in 2017. Similarly, this one was not as exact, but when the SMA gets above that old high around 19K rather, that was the top. It was a little bit late, so it was actually over a little bit. So it was a little bit late. So the point is kind of looking at when the next market top could be from a timing standpoint. I have it labeled here with a question mark. If we keep the trajectory that it's currently on, it would be all the way out here in April 26. That's not probably likely. The next phase of the bull run is going to pick up and go higher, which will adjust that SMA, obviously, because it's a moving average a little higher. So that puts us in just, giving credit to Ben, of course, with dubious speculation, speculating here that this could put us right around that November timeframe. And that fits. And so being very mindful not to have confirmation bias and not to get married to these ideas, but certainly reasonable. If we see an uptick in price up into this 150K region, potentially 200K, but let's just say in that area, the SMAs would turn up, putting us at the top right around November of 2025, and that would be in line with the last market cycle, November 2021, when I was suggesting to get out as well. So interesting. We'll keep you posted. New information equals new decision, so we'll have to see how that plays out. All right, so here we have the 1 hour, 4 hour charts. Not going to really get into that. If you guys are day trading at all, the 4 hour, seeing some bullish divergence, waiting for this to go green on our trend strength indicator. Bollinger Bands are tightening. Kind of interesting to always pay attention to those slightly smaller time frames. But coming back in here and not wanting to look at Ether futures, but everything's pretty much red today. Again, we covered Bitcoin. Let's take a look at Solana. Solana, however, still has the head and shoulders pattern potentially in play. Not what we want to see. Bitcoin, leading the market. Hopefully we'll see the same, bouncing off of the uptrending channel. So just to clean this up a little bit, this squiggly line here, that's a highly technical term, but basically this is how chart patterns generally go. The bulls and bears in a tug of war, each needs their turn. Pushing up into the sell block. Again, we've visualized where sellers are on the books. The limit orders, generally good place to see where the selling pressure is, that midpoint. So we've just visualized that. And as you can see, these are fairly good for when to buy and when to sell. Okay, you can learn more about that at moonstream.io/maxsignals if you'd like to learn more about those. And so anyway, what we're watching for here, I don't like this candle right here. And hopefully this can hold, but a bearish early reversal indicator signaling. And if these start to line up red, then I don't know. Then we might be looking towards more of this right shoulder, head and shoulders pattern looking. But I think Sol has enough strength to bounce out of here. And, it had 1, 2, 3, 4, 5 days up. Usually that's a profit-taking time frame, unless we're in that parabolic bull phase, which we're not. So I would expect this thing to resolve and go higher. If it does come down in the green zone, I feel okay with that because we see lots of buyers down here. However, if it fails and starts coming down to 145, 140, then the measured move on this head and shoulders is going to put us down in this range potentially. And, this is not exact. It could probably get a little bit tighter. And they're there, and then, coming down. If that happens, we're probably going down to 100 again, or preferably putting in a higher low, because that down here, we nailed that, by the way. Buying in the buy block, we were telling M3 members to buy Solana anywhere from $100 to $104. So I was buying in there and caught some right down at that 104 level. So that's been great. And also back down in here at 144, 142 is where I got filled. And again, that's in the middle of these buy blocks. Guys, I hate to say it, but we've almost easier to visualize than talk about it. We've almost made this so simple. These buy boxes, we buy in green, sell in red. That's kind of our mantra, and use parallel trend channels along with the other signals. If you're using RSIs, MACDs, stochastic, that's what everyone else uses. You don't have an edge. Make sure you have signals that give you an edge. And so anyway, moving right along, a couple things here. You know, some of the ones I like, Filecoin, but the altcoins here are seeing a bit of sell pressure, and that's okay. We do see these kind of pushes up, pullbacks. The big thing I want to watch for is higher lows. And, you know, look, buying in green zones, selling in red zones. Not much harder than that. This is a possible 40x here that we've shared with our members over the last couple of years. All the way back to 2018, this is an interesting chart here. It is held in this $2.50 range, and for a while it was putting in higher lows. It has come back down here, but it seems to be strong buying support down here in Filecoin. And of course, this is in the cloud storage market, competes with Amazon AWS. Maybe a little early. I think it's suffering because the AI projects also are not quite there yet. When AI takes off, Filecoin will take off, and here's why. Because AI projects, decentralized companies, they don't want to store their data on a centralized platform like Azure or like AWS, Amazon, right? It's incongruent with the ethos of decentralized blockchain. So when Fetchcoin and Render and the AIOZ, when they start to run, I think you'll see Filecoin start to push higher. And so anyway, that's a kind of a freebie there. Ondo, also nice looking chart, and a slow and steady, slow and steady wins the race. Uptrending trend channel. These don't always go forever, but it's an interesting looking chart. It looked a lot better the other day when we were putting a buy order on this. This is a weekly chart, but the daily, this is just a reminder of how treacherous these markets are. Look at this bullish bounce, strong bounce, and then this was a big green candle yesterday, and then it sold off end of the day. Fake out, and now we're heading back down. So we just have to be a little more patient with altcoins. So, but anyway, this is a project I like. Polkadot, also interesting. Parachains, kind of in the transactions per second, but Polkadot looking like it's going to roll over here. What I would suggest, if you're in any coins that are rolling over, to sell half. These red boxes are typically good sell points. Not selling everything. If you sell a third, if you sell a quarter, if you sell a half of it with the intent to buy back lower and dollar cost average, that is the best strategy over time and a good way to compound your position sizes. Origin Protocol, another one we're watching. Anything else we want to look at? Lido Finance, again, DeFi just not looking really good. Unusual sell-off here. I wonder if these aren't fears of this Israeli-Iran escalation is the right word. So just going through a lot of these, not seeing anything looking very promising. The overall markets are kind of looking red today. So what I was looking at, of course, let's look at Fartcoin. Can't have a serious analysis of crypto these days without looking at Fartcoin. I'm half joking, but remember it was a week or so ago, not too long ago, when Bitcoin was down 3%, Fartcoin blasted up 10%, and has had some serious gas behind it. So anyway, keeping it funny, guys. 1, 2, 3, 4. But look, this is not a bad looking chart. Cup and handle. I did buy some. And look, when this cup and handle breakout, of course, when we get up to new highs, when we break into Fart Discovery Zone, that was when things can really get some gas behind them and go off to blast off to new highs. I have an alert here, so $2.50. Who knows when it gets up there? I like the chart, and yeah, so why not? I sold out of some of my degenerate coin budget. I sold some SPT, and glad I did. Look, don't be married to your coins, you guys. I liked SPT at CFI. It is a launch pad on SUI and has some good tech, but when this thing started rejecting here, I sold my SPT, and hey, I like the chart. I bought some Fartcoin. I'm not going to lie. And anyway, if I think Fartcoin's a new pirate chain. Pirate chain is just funny. ARR, the symbol R, and last cycle we had some huge wins on that. So, every cycle has its kind of funny narrative that people just kind of get behind. So there you go. Of course, there's zero utility or function in Fartcoin. It'll probably go to zero. So please don't bet the farm on that, or even I'll buy any of it. Probably you will lose your money if you do. full disclosure. Anyway, that's my cover my ass. So looking at Fartcoin, sorry, pirate chain rather. Apologies, nothing really there. Going down the sea of red, everybody. I would focus more on the stronger projects, just to slow down a bit. Bitcoin, Solana. And, you know, the overall market here, a little bit scary. Not sure. I think this is probably from war fears, maybe interest rates. Nobody's talking about this. Let's see. Bitcoin price fractal points to bull trap that could send below 100K. You know what, guys? The biggest magnet toward those prices would be the open gaps. But honestly, I think we're gearing up for a next leg of the rally. Whether it's here 3 days down, usually we get a bit of a relief. At the most, we have 4 days down lately. But look at this. 3 days down here, and then we rocketed higher. It came down to support at the 50-day. Let's zoom in on that. Some of you might be new to TA, and this is something you should pay attention to. You know, typically, we don't see too many green or red days in a row. Even over here, 1, 2, 3, 4, 5, 6, 7 days or 7 weeks on Bitcoin. Generally, I have some consolidation around there. And so we had, what do we have? 4 days down red here, 3 red days down to the 50-day exponential moving average. And then boom, it took off. Right, what do we have here? Broke up over prior resistance, found a support 3 days down. And then I certainly could see this play out. And then boom, we break up to new highs. And so, guys, you know, I'd be in the game, but be watching. You can always take partial losses with the intent of buying back lower. And hey, here's the thing. I always advise my members, it's better to do that, because what if price rockets higher and you've sold half of it? Well, generally, you'll see a pullback to retest where you can buy it back. All right, so we go into that more fully in our live weekly classes. But anyway, by the way, if anybody, I do have a few spots left available for some one-on-one help, and you can go to moonstream.io/max coaching, and I'm working with a number of people one-on-one. If that's you, if you have 6 figures in the markets or more, and you really want to learn how to protect it while maximizing this bull run, with a optimized portfolio in a Google Doc that we review together one-on-one every 2 weeks, plus 24/7 chat with me, and in a private client chat. You can go watch a video there and check that out. moonstream.io/max coaching. Okay, so all right, anything else? Let's keep going here. Yeah, so here's the path to 150K Bitcoin. You guys have probably seen this. Here are the 11 reasons why I think we'll get to these numbers. I'm not going to go into that. You can go Google it, Brett Fogel Trading View, where I've covered these before. But essentially, the same Fibonacci pattern here that called the exact market top from the last cycle, which we can see right here. Same Fibonacci study as I've drawn it would put us at the 1.618 100K, which we hit. And had a lot of trouble there. I told people months ahead of time, we're going to have a hard time on 100K. Sure enough, we did. And so what I think is going to happen, you know, just judging from the chart, show me the charts, I'll tell you the news. I say that 100 times every year at least. So my best guess, we are in the 4th and final parabolic push, this final angle, and the 1.618 from high to low put us at 100K. We are above that now. I think we can easily push up to 150K pretty fast. Maybe throw over up here around 170. This fractal is from the prior market cycle, by the way. It doesn't mean it happens exactly like this, but just kind of gives us a bit of a roadmap, right? Okay, so we'll put that back. But anyway, let's say we get to 150. I'll be selling, taking some profits, waiting for a 30% pullback to re-enter, and then 200K possibly by October. So I'm suggesting sort of near-term high 150 by this time next month. Certainly can happen, guys. This is a weekly chart, but these things haven't been known to happen pretty fast. And so this arrow is in July 7th, 2025. And it doesn't make sense, though, does it? If 4 weeks, these would have to be big weekly candles, but we have seen that before, as we can see. Okay, so anyway, at that point, 150 likely pullback, but 200K for sure. We had this much trouble at 100K. You can bet that the shorts will be in force, the bears will be lining up here like linebackers, and the skittish people and traders like yours truly, I will be out. getting out as we approach 200K, probably a little below. If we get into August, you know, I'll be taking some off the table. The thing with trading is you want to capture that middle 80%, not trying to catch the exact low in the top, although that would be ideal, and we're going to try, but we don't want to be holding the bag and holding your bags when the bottom falls out. When the music stops playing, it's musical chairs, as we know. So anyway, this is kind of a rough roadmap. I think this is the way to play this, and so we'll keep you posted. All right, you guys, hopefully that helps. And again, if you liked the video, please hit that like button and subscribe, and leave a comment down below. I'll try to get over and read some of these. And certainly if you guys have anything you want to look at for next time, put it down in the comments. So anyway, cheers everybody, and we'll talk to you soon. Bye.